All right, looks like we have a few on board. So welcome everybody to Business Insights, a very exciting webinar series hosted weekly on Mondays at midday by a panel of industry thought leaders, for business owners who simply want to be in the know about the latest news and most significant initiatives in the Australian business landscape that impact how they do business. Our panel of advisors aim to inform, educate and provide strategic insights to the changes in the economic, legislative and financial landscape that affect small business. We aim to guide our viewers each week to navigate business challenges that they face throughout COVID-19 and beyond. So let's now meet our panel of industry thought leaders. First up, we have Sam Qureshi from MoneyClip Private Wealth. Sam, welcome.
Thanks for having me.
Next up, we have Lisa Garrido from Enigma HR. Lisa, welcome.
Hello, good morning, everybody.
Then we have Rob Skeen from Oasis Skeen Property. Rob, welcome.
Hi, Ian. Thanks for having me.
Thanks very much. Next, we have Bernie Tuamau from MGA Insurance Brokers.
Morning, Ian. Hi, guys.
Thanks for coming, Bernie. And then we have Adam Lyle from O'Brien Palmer. Welcome, Adam.
G'day, Ian. How are you going?
Not too bad. Thank you very much. Okay, so what we're going to do is we're going to start off with our first expert. We're going to go to Sam Qureshi from MoneyClip Private Wealth. Now, Sam is going to cover a number of areas for us. He's going to be covering investments, interest rates, and superannuation. So, Sam, did you just want to give us a brief overview of what happened in the market last week, please?
Last week was quite an interesting week for us. There's a lot that actually occurred. Market had a slight increase over the week, but the week would be best represented by a seesaw increase and decrease without a lot of directions. And last week also saw new unemployment figures for US, now sitting at well over 36 million people. We saw the ugly part of dealing with our trading partners. That raised its head up last year, with China retaliating against Australia, being on board with the US in making China more accountable for COVID-19. We saw attack on our agri-businesses, tariffs on barley at 80%, and further impacts on our meat industry. We also saw a number of large retailers filing for Chapter 11 bankruptcy in the US. JCPenney, which is similar to our Myer here, was one of those. Locally, one of the retailers, G-Star brand, also went into administration. So we're starting to get a bit of a feel for what's likely to happen in the real economy when things open up. Of course, restrictions are easing, and this has just started. There's obviously a long way to go, and any kind of increase in income obviously is very, very welcome in the hospitality and retail industry in particular. And of course, as internal travellers start to be able to move around, we might see a little bit of uptick on our tourism, which will be also good. There's a big impact on childcare, and the government has said that they're going to cease providing free childcare subsidy potentially by the end of June. And of course, some changes to the JobKeeper, which I'm sure you'll cover off on, Ian, as we go. I guess looking forward, what we're going to see in particular is a release of a report, in fact, today, into the impact of the households due to the COVID-19. And that's going to be interesting to see what that actually tells us. As you may know, Virgin Airlines has gone into administration, and the bidders are firming up for who's going to buy Virgin Airline and take that over. And of course, that's going to be really good to see to make sure that there's some competition in the airline industry in due course. And a key thing that probably not getting a lot of a message out there at the moment, but it will become an issue, I guess, going forward, is up until now we've been talking about a Reserve Bank providing liquidity, but going forward the question will be more about the solvency of the businesses. So obviously every business will have to make sure that they work on that to make sure that they are solvent and they can continue carrying on business. That's that on the markets.
Thanks very much, Sam. That's a great overview there. And what about interest rates? What can we expect for interest rates this week?
Yeah, so banking sector continues to evolve due to the further restrictions around COVID-19. For example, Westpac St. George have now started a new requirement of 20% deposits for any self-employed person wanting to get a loan. That's a brand new requirement and quite restrictive. Some banks are also putting further restrictions on the non-income-based assessments for loans. So other than your base income, everything else is being basically pushed down in terms of what they regard as real income. And so that's going to have an impact. I'm also reading that there are some valuers that are starting to value properties lower than expected. So I guess that's one of those things that's a lagging effect that we're going to see coming through.
Yeah.
On the flip side, the lenders are starting to consider accepting JobKeeper as a form of income, but that's only on a case-by-case basis. So that's not something that you should necessarily be heavily relying on. Because of everything that's happening, the banks are quite keen to make sure that they keep your business. Hence, the variable rate loans are still quite cheap. In fact, since a week ago, have slightly dropped. You'll be able to find many variable rates now sitting in that range of 2.6 to 2.9% per annum across the banks. And of course, the fixed rate is where the best rates are found at the moment. A 2-year fixed rate, you could get it as low as 2.09%. And I have to say, this is the lowest I've ever seen in my lifetime. So it's quite amazing to see that. The current payment deferral program is assisting people, obviously, with the cash flow. But really, the real test of that is going to be when it stops. And how will people be able to cope with loan repayments, etc., at least at lower interest rates going forward. And lastly, currently the markets are pricing in a better than 50% chance of a rate cut potentially in June to 0%. So I guess we'll wait and see what happens with that.
Thanks very much, Sam. And how are your clients with in terms of the ones that you look after their superannuation? How are they feeling about their portfolios and the way that the market's performing?
So at the moment, reasonably okay. Although there's still some concern about the fact that there might be more downturn coming. So for the longest time, we've been looking to take a little bit less risk within the portfolios and adding a bit more stability to the investment options that we take in, just so that we have a better cushion to be able to see ourselves through.
Okay, excellent. Thank you very much. I might just make a note to all of our attendees today. There is a Q&A box down the bottom. So if you have any questions, please put them in there. So if you've got any for Sam at the moment, please put them in there and we'll try to get to those at the end. And if we can't, then you can contact him directly. Let's go to Rob Skeen from Oasis Skeen Property Buyers Agents. Rob, can you just give us a quick update on the property market, please?
Will do. Thanks, Ian. So last week, Domain Property Group recorded 149 property auctions across Sydney with a clearance rate of 76%. That was an increase on last week's 68. It's been a steady increase over the last 3 weeks, and it looks like the property market is slowly climbing up from the canvas after being knocked out by COVID-19 in the first 2 weeks of the pandemic. However, not all good news for property owners, with the Commonwealth Bank announcing a 32% drop in house prices over the next 3 years. Now, they say this is due to the bank's base case of a 6% economic downturn this year, the high unemployment, and the government stimulus grants coming to an end as we reach spring. Now, it's not all good news for property buyers either. With these sorts of scary headlines, property buyers lose confidence in buying, thinking that maybe they should wait, they procrastinate, and they get paralysed by over-analysis and don't end up doing anything at all. Time and life ends up passing them by. My tip for this week, if you see the home that you love and it meets your family requirements, you can afford it comfortably, your employment is secure, then buy. It's time in the market. It's not trying to time the market. That's it from me this week.
No, thanks, Rob. That's exactly right. And there's a lot of stock out there that isn't advertised. So how can people go about getting information on that stock that is potentially what we call off-market stock?
Yeah, we touched on that briefly last week. I guess it's just staying in touch with your agents that are prominent in the area that have all the listings and are selling property all the time. And you stay close to them, they'll be able to inform you of anything that comes up that meets your brief and obviously your requirements. Even if you catch up with them for a coffee or You know, call them, email them, harass them almost. Makes them show how keen you are to buy.
Thanks, Rob. That's really good advice. And guys, if you've got any questions for Rob Skeen, please put it in the Q&A box down the bottom. Next up, we're going to go to Adam Lyle from O'Brien Palmer. Adam, what's happening in the world of business advisory at the moment?
It's interesting at the moment, the business climate is actually quite fragile, but only in certain sectors. And that fragility is being exacerbated now with the partial rebooting of the economy. For example, you've got only the smaller elements of the hospitality sector really being able to take advantage of the reopening of the maximum of 10 people per sitting. Imagine just for a moment if you had a restaurant that had 100 seats, it's almost worthless in terms of your time and energy in opening up just for 10 people. But then you've got franchises like Rashay's, who opened up 24/7, who had a 12 o'clock sitting, 2 o'clock sitting, 4 o'clock, 6 o'clock, and they've kept going. They've been fully booked in nearly every restaurant in the entire time. So business at the moment, those who are agile enough to create opportunities for their own businesses are actually reaping the rewards of those that are presented to them. The second thing is that businesses that have been have succumbed to the failures of the larger corporates are now coming out. As Sam mentioned, and as we talked about last week, the Virgin collapse ended up having quite a lot of creditors that are out there. There's other collapses that are going to come out this week. There was quite a few appointments of voluntary administrators last week, just like Sam spoke about. So the issue there is that suppliers, when they stop supplying inventory that is more than 25% of the inventory that you would have on your books that you're passing on to your customers, then you need to source an alternative source. Secondly, if you've got customers that are unable to contribute to those receivables that you would ordinarily expect, therefore it affects your cash flow, businesses are really suffering in terms of those environments that have been placed on them at no fault of their own, and certainly no fault of even the suppliers or the customers that they're dealing with. So business confidence, I suspect, this week has actually taken a dive. We are waiting on the NAB business confidence numbers to come out, but ultimately time will tell. The interesting thing is that consumer confidence is up, and that's up because you can see all the people pushing and shoving at the shops again, despite what we're supposed to be doing is 1.5 metres away from each other.
Thanks, Adam. And what advice can you give to businesses at the moment to immediately halt the worsening of their situation that they might have? Is there anything in particular?
Look, the sheer reality is, look on the screen. You've got some fantastic advisors here. That's the first step. You need to have a good accountant. You need to have a good HR person. You need to have a good, solid advisory panel like the one we've got here. Keep those people in your corner. Meet with them now. Work out what's going on in terms of the recovery plan coming out of the other side of COVID. And if you can, meet with them regularly in the ensuing weeks to make sure that milestones and achievements that you want to set for the business are attained. Readjusting your business plan is probably a really good start with that, if you have one at all, and making sure that your negotiations with those key stakeholders that impact your business externally, such as your landlords, are well in train.
Yeah, thanks very much, Adam. We might go to Lisa Garrido now from Enigma HR. Lisa, the question that I have for you is what are the biggest HR challenges coming up that you're going to see that your clients are going to be faced with and you're going to help them out with?
Well, thank you for asking that question, because I'd actually like to pick up on what I discussed last week in terms of given that isolation restrictions are being eased. So the question I posed last week to all our viewers and listeners was, is your business ready to open safely? In other words, do you have a COVID safe plan? And apart from what Adam was suggesting, and as well as what Sam was suggesting, the first thing you obviously need to do is seek external advice or expert advice if you need that. when you are evaluating your business strategies and goals, trying to head back to business as usual, because we already exist in a different world, and business as usual is a different form. So there have been more announcements today regarding transportation plans, etc., and I'd like to go through that, and that's one of the challenges we're going to be facing. So my recommendation as we ease our way back into the new business as normal is to also phase your way back into reopening your business. Do not rush this process. The key here is to make sure that your teams or your employees feel that they are safe, so that they can willingly come back to work without a lot of objections or a lot of concerns or stresses. So the first thing that you'd need to look at, and where we would help businesses, whoever your HR practitioner is that develop process and policies around the following. Firstly, around social distancing. Secondly, around hygiene practices. And thirdly, around general cleaning and other business operations, because your business operations will change as you head back into the workplace. Once you've established these policies and procedures, the first thing you need to do is to train your employees and make them aware of what the processes are, what the new processes are. This way, what you're actually doing is making them feel safe, that you've thought about this and you've considered about this well as the employer, and that you are looking out for them, not just for the business. So things that you need to look at is consider all the supplies that you have at the workplace. Do you have enough sanitizers, enough hand gels, enough cleaning products and agents? Do you have all the PPE that you need, depending obviously on what industry that you operate in? Once again, I emphasize that Safe Work Australia's website has got all the checklists all small businesses and large businesses needs to know in order to make sure that you are compliant with keeping your environment safe. So another thing to think about is that if you are leasing an office, or if you're operating in a workspace that's shared or in a serviced office, speak to your property managers or strata managers or your landlords and ask them the question about what they're putting in place for the building or for the workspace to make sure that they comply. Once again, once you have all of this information, you can come up with a safe to work plan. Map out how your layout would look like. You need to make sure that you at least have a 4 square meter proximity for every employee to make sure that you're complying with the restrictions. Minimize or stagger your number of essential employees. In other words, think of who in your teams need to actually work on site to start off with. If others don't have to be working on site, perhaps allow them to work from home and to continue working from home until further restrictions are eased. Also discuss, now is the time to discuss with your team members who among them have vulnerabilities. How many of them are caring for vulnerable parents? Or how many of them actually have existing health conditions they haven't spoken to you about that they can be very transparent about? So this is about connecting with them and finding out what their limitations are before you work out the roster of easing people back into the workplace. So get to know the special circumstances your employees have. And that's pretty tricky because that would mean that they're confiding in you a little bit more. And if you're not the type of manager that can be confided in, you need to try and break that barrier because you have an obligation now to look after them. Further announcements today, at least in the state of New South Wales, is that you need to be downloading all the transport apps, whether it be rail, bus, light rail, ferry apps. In these apps, you will get updates on when it is actually safe to choose any of the modes of transport, because they will be live and it'll be updated constantly as to what modes of transportation are full and when you should be taking these modes of transport. So talk to your team members and try and work out how they actually come to work. Are there other ways of getting to work apart from the bus, the train? There will be pop-up bike lanes, for instance. There will be pop-up parking centers, very much like an event-style parking that the governments are going to be implementing very soon. We still have to see that, by the way. So make sure that you encourage them to start looking at these different modes of transport, and then start looking at measures in place to get them back to work safely. Next week, I'd actually like to discuss what happens if your employee refuses to come back to work because they feel unsafe. These are the challenges we're faced with now. Thanks.
Thanks, Lisa. There's some really good points there. So if anyone's got any other questions for Lisa, please put them in the chat box, or don't hesitate to contact her afterwards. So next we're going to go to Bernard Tuamau from MGA Insurance Brokers. And Bernard, the question that I had for you this week is, what advice do you have for SMEs on risk and insurance?
Thanks, Ian. As the guys touched on over the last week, we've seen some restrictions lifted. This was evident on the weekend with cafes and restaurants sort of buzzing. Now, there's no doubt that the hospitality industry has been hit quite hard. And this is more important, time now to try and save money where you absolutely can. Now, I'd like to touch on workers' compensation, Ian, and this is, unlike other insurance policies, which is, I guess, open market, and, you have insurers fighting for consumer dollars. Workers' compensation premiums are calculated pretty simply. It's your wages or remunerations times your industry classification code. So put simply, if you work in the hospitality or the restaurant industry, it's your restaurant, or known as a WIC code, times your wages. So in a simple example, if you're an SME paying $300,000 or $400,000 in wages, it's that times your industry classification code. Now, workers' compensation is one of those policies that gets overlooked pretty quickly. People just tend to pay their premiums and move on. However, after every 12 months, there is what we call an adjustable premium declaration. And what this means is what you declared or estimate in the 12 months, at the end of that 12 months, you have the opportunity to declare and adjust your wages that you actually did pay. Now, again, because we're in COVID-19, hospitality has been hit. There's a pretty safe bet that there are some premiums to sort of be saved. So, that's one way, I guess, consumers and SMEs can save money. Take the time out to complete these declarations. Also look at the options that the workers' comp insurer or your general insurer is sort of providing in terms of premium payments. Look at paying premiums over, a monthly installment, a quarterly sort of basis, just to sort of help with cash flow. And one of the other areas I want to touch on is, last week we spoke about business interruption, how business interruption did not respond to, I guess, this COVID-19 situation. Looking at the property owner market and the landlord market, one of the policies that we have seen a rise in claims is the landlord's rental default sort of product lines. Now, insurers are quite scared at the moment in terms of the rise in these sort of product. Now, if your tenants are doing it tough, and if they do qualify for, I guess, rental default, make sure you have those discussions, have a look at your insurance policy, and make sure that, if you are entitled to this, submit a claim. I read an article over the weekend on insurancenews.com, and Suncorp, who provide a large market share of landlord insurance in Queensland, the feedback that's sort of giving is there's a large delay in, I guess, premium deferment payments. So, what will generally be a premium uptake in over a course of time is now sort of deferred towards the back end of the year. What they're also seeing is quite a large sort of intake in claims and rising claims. So again, Ian, my advice is for SMEs, sit down with your insurance advisor or your insurance broker or provider and have a look at making sure that your insurance policies reflect your current situation. And where you can, if you can defer payments or take up monthly installments to help with cash flow, take up that option. Again, if you're a property owner, have a look at your landlord's policy. If your tenants are generally doing tough and they do default on paying their rent over a long period of time, look to see where you can potentially claim underneath your landlord's insurance policy. That's it for me this weekend.
Thanks, Bernie. There's some really good points there. And now I will talk about tax. So I didn't introduce myself at the beginning of the meeting, but my name is Ian McLaughlin from Imperium Accounting and Tax. And today I want to touch on a couple of important dates in the tax lodgement calendar. The first one that we have is the 26th of May, which is when the business activity statements, if they're lodged by the accountant, are due. Now, this is important for one major reason that I want to touch on this week is because of the cash flow stimulus boost that the ATO did announce in March. So this is essentially going to be for the credits on the pay-as-you-go withholding that is paid on staff wages, okay, that the ATO is going to give. And they said that they were going to give a minimum of 20,000 up to a maximum of 100,000. So these are going to be spread between the March quarter BAS, the June quarter BAS, and then the following quarter BAS. So it's really important to make sure that you get your BAS lodged on time. But not only that, you need to work out what your amounts are that you are going to receive for the stimulus boost. And these need to be put into your cash flow. Bernie there just touched on cash flow, which is a really good point. But it's really important, especially in these times, that every business has at least a 12-month cash flow forecast. And these should be adjusted now to include the cash flow boost that is going to be received. So you need to speak to an accountant to work out what those amounts are going to be and when they're going to be received by the ATO. The next one is the JobKeeper. So the applications for JobKeeper close on the 31st of May. So that means you need to have enrolled with the ATO by then. Now, another important aspect about JobKeeper is that businesses are not going to get paid their JobKeeper reimbursement payments until they lodge their monthly declarations. So the monthly declarations for the month of April opened up on the 4th of May, and the ATO has typically taken about 4 days to process the payments, although I have seen it has been longer, but the quickest has been about 2 and the longest has been about 12 days. But it is just random. So a lot of people are worrying about, oh, have I done the right thing? I haven't received my money yet. You can call the ATO, but they're going to give you the same response. It's on its way. It's on its way. They can't give you definite dates for that like they can do when they process your tax refund, unfortunately. Another important part about JobKeeper that I just want to touch on is that there is the alternative tests that the ATO did bring out. So when JobKeeper first got announced, there are obviously the 3 standard tests. A lot of businesses didn't qualify under those standard tests. So then if you fail those, you need to then go and look at the alternative test to make sure that, you know, to understand if you qualify. Now just remember, if you get one person qualifying under JobKeeper, it's going to total $19,500 between now and the end of September that the government will reimburse you. So it really is worthwhile just triple checking that you qualify for that. Another important piece about JobKeeper is the eligible business participant. So this might be a director or shareholder of a company, a partner in a partnership, or a trust, or sorry, an adult beneficiary in a trust. Now, for each business, you can only have one eligible business participant, but basically what that term means is that this person doesn't have to be an employee of the business, but they can still receive JobKeeper if they qualify under that eligible business participant. So it's a really important piece to remember and factor in, because I have seen a lot of people going in and lodging their JobKeeper applications, not thinking about registering an eligible business participant, because they might have a director that doesn't get paid wages. They might just get paid dividends. And they might think, oh, because he's not an employee, he doesn't qualify. Well, he does. So it's really important to make sure that you really go through and work out whether you do have one eligible business participant for every business. So the key points for me this week are 26th of May, that's when the March BASs are due. 31st of May, that's when the applications, or enrollment I should say, for JobKeeper close. Once you've got these amounts, it's really important that they are put into your cash flow, because you want to be able to see what your predicted bank balance is going to be in 3, 6, 9, 12, and then you can even string that out to 24 months time. So especially during these times of uncertainty, as all of you have talked about, it's really important that businesses have that peace of mind, and they will get that from a cash flow if they do it properly, as to where they are going to be sitting at those different points in time. So I'm going to now put it over to either of you, all of you, to see if you have any questions for me. Otherwise, I'll go to Lisa Garrido. And Lisa, I think you've been monitoring the chat box, so you'll see if anyone's got any questions that we might be able to answer.
I sure have. Firstly, Ian, I just don't understand how people can operate or businesses can operate without that proper advice from an accountant. You know, we talk about cash flows all the time, and specifically during this uncertain period, but really that's one of the key tools in business that you should seek your accountant to assist you with, and have that consistently regardless. So thank you for that insight. That's great. Firstly, there's some positive feedback for us panelists. One of our viewers said, "This is amazing. Thank you to all of you for doing it." Awesome, guys. And there's one question, Rob Skeen, this is for you. How many properties would have gone to auction a year ago, if you have an idea, versus the 149 now that you mentioned? You know what? Give us a comparison.
Yeah, sure. I don't know, you know, the exact amount for the last weekend, but when I looked at it 2 weeks ago, we had about the same 140 go up for auction, and that time last year there was about 350.
Wow.
Yeah, so almost double. Listings are down, and as I said, I think I touched on it the other week. If people don't have to sell at the moment, they're not. They just want to, you know, sit it out until this is all over.
I see. Good. Thanks for that.
Rob, I've got a question for you, and maybe it's something you could touch on next week. Is the vacancy rates with commercial and industrial property as a result of the effects of businesses pulling out of those leases that are in place? I would imagine that there's maybe some early data that's come out for those vacancy rates, and I'd be interested to hear your thoughts about that, because that of course has a wider impact on the economy.
Yeah, so
Adam, that's a valid question, because I'm going to touch on that, because from our experience in the last 3 weeks, more and more of our clients are actually suggesting that they will have a very different workforce and employment conditions. So yeah, Rob, if you can try and find out, you know, the impact there, that would be amazing for us to know.
Yeah, we'll do. Coming back to you, Lisa, you sort of said, you know, how many employees are going to be saying we don't want to come to work because it's unsafe. I was thinking also too, how many employees don't want to come to work because they're enjoying working from home? Would that be a few?
Well, you know, we are getting those inquiries. So far, not so much about that. However, there are some employees or staff are actually ringing us, because we provide the outsourced service, and asking the question about how can they post the question to their bosses. Yeah. So very interesting. There will be a pattern. But as I said earlier, I think the key thing here is that be reasonable as an employer, and firstly make an assessment which positions really need to be on site to start off with. Yeah. And then create the measures in place to make sure that your staff feels safe. And eventually, as you phase back into it, like I suggested, I think more and more people would want to reconnect with their team members. And so eventually, hopefully, there will be a bit of a hybrid for some businesses. And for others, most people might want to actually come back to the workspace. Yep.
Excellent. Thank you very much. Well, I'd like to thank all of our panelists today. So Sam Qureshi, Lisa Garrido, Rob Skeen, Adam Lyle, and Bernard Tuamal, and myself. Thank you very much. And I'd like to also thank you, our attendees, for attending the webinar. Just remember that we are going to be putting this on YouTube, so you will be able to rewatch it again if you like. And we hope to see you next week. So thank you all.
Thanks, guys. And thanks, Ian. Great job.
Thank you. Have a good week, everybody.
See you guys. Bye.